Technical Tuesdays. That's right, again, Technical Tuesdays.
Major barrier of resistance is 1.15. As long as we stay below that level and break this 1.12 level.
Hey guys, and welcome to the AstroFX YouTube channel, and you guys are watching Technical Tuesdays episode 51. Now before I begin, you guys might see a change. This time I have two white guys next to me, so I'm gonna let John introduce himself firstly.
Hey guys, how are we doing? But first, actually let me take the opportunity to say thank you for being on Technical Tuesdays, because back in 2014 this was almost my gateway into the Forex market. Now, fast forward a few months, I was one of your early kind of students, wasn't I? Now, from there, it was about actually applying the knowledge that I learned and watching them use my progression in this trading market. Now, look, here we are, episode 51, and I'm in front of you guys live on Technical Tuesdays.
Well done, John. So for all of you new subscribers and viewers, Technical Tuesdays, we have a long archive, and we started this years ago. It's where you come to find your market breakdowns, technical analysis going forward, but we also like to throw in other gems such as market psychology, our personal experiences and information going forward. However, we've been slacking recently due to we have been putting so much effort into our new website, everythingfx.com, where you guys have been receiving our daily technicals every single morning.
That's right, everythingfx.com. We're probably gonna have to make another video to explain what that's about. If you guys enjoy our weekly technicals, go ahead and check out our daily technicals. Now, a part of our YouTube channel, you guys might have realized there's a lot of vlogs recently. So we just come back from Miami, in which we did 3 very exciting, very fun to watch vlogs. So we're actually going to be going back to American States in about 2 weeks time for LA. So for anyone that's watching this right now, that's from the States, go to astrofxe.com, and if you guys want to meet us in person, come be a part of our trading workshop, make sure you check that out. Now, Technical Tuesdays, Sean's went through what we used to do. Well, we sat here for the past few weeks and we tried to think, what can we do that's different? Can we do Technical Tuesdays in different places? Can we do more explanations, which Sean talked about? One thing that we thought was vital was to introduce macroeconomics, the fundamentals of the market. So I'm gonna let John explain a little bit about what we're gonna be introducing to you guys this week.
So guys, we want to be introducing something called major macros. Now this is our opportunity to break down certain fundamentals throughout the week, because when we were looking at it, or from when I was looking at it from an early stage, there would be 70, 80 different type of fundamental news announcements coming out. What we need to do is isolate. We want to isolate maybe 20, 25 different ones that we could bring to you and actually give you the correct information and when the appropriate time for them to come out is.
That's right, so we're going to call this Major Macros, giving you guys the most important news impacting data that's going to influence your trading. Welcome. So this is a great week in particular to introduce Major Macros to all of you guys, with UK interest rates out this Thursday.
That's right, and interest rates are actually the biggest driving force behind the FX market. Now, a quote I often like to use when trying to explain interest rates is, it's often the cost someone pays to borrow somebody else's money.
That's right. So why do interest rates move up and down? Ultimately, the interest rate is an indirect response from a group of the other macroeconomic data that is released, such as GDP figures. We also have unemployment claims and also retail sales. When the interest rate is actually modified, we will experience high volatility within the markets.
That's right, so interest rates are announced by one of the 8 central banks. These central banks being Bank of England, Bank of Japan, Royal Bank of Australia, and these are all a part of the Monetary Policy Committee. These are the guys that are the directors that get to choose on the board, and it's a majority decision. Do they decide to bring the interest rates up or down due to inflation?
Yeah, and as Nat actually mentioned, this is a vital week for the Great British Pound. The interest rate is currently at 0.25%. Now this is indeed a record low for about 10 years now.
That's right. 10 years ago, actually in September, we actually seen the interest rates drop, and then the pound index actually fell from its 100 base level. I was monitoring this yesterday. We're actually looking at 75 to 76 as a figure. So we're actually down, the pound is down 25 to 26% against its counterparts in 10 years.
So This week is the Policy Committee 8 members majority decision, and there's two things in particular which are going to affect the interest rates, which the meeting is on Thursday the 14th.
That's right, and actually this morning we did have inflation figures coming out. I think they were, for the last couple of months, expected to be around 2.6, 2.7%. Now, in fact, every bit of data that came out today against the pound was, in fact, better than expected.
That's right. As behind us, we can see the pound has in fact rallied, not just today, but in the last few weeks or so. From a technical standpoint, pound actually made lows at 1.2, which it really struggled to take out. So technically this has more or less been priced into the market already, and we're expecting the pound to actually increase and go further to the upside.
That's right. So that's the inflation rates. The other bit of data we have coming out is tomorrow, which is the unemployment data, which is the average earnings. Both these things together showing a great boost in the economy, in the pound would definitely be taking GBPUSD a lot higher.
Now, this could be the first increase in interest rates in over a decade. Now, that means over the last 10 years, we've actually been falling around 0.25%.
That's right. So it's August last year, in particular, where interest rates dropped from 0.5 to 0.25. Now, you're thinking, why was that? Well, England was impacted, of course, by the Brexit, one of the most damaging things to happen to the UK's economy. After that, these central banks, Bank of England, knew that people need to start spending more to boost up the economy. So bringing in interest rates from 0.5 to 0.25 will increase borrowing, therefore increase spending. Now, we can see that pound is slowly making it struggle back up, so therefore that money is being spent well and pumped back into the economy.
Long story cut short, the modification of interest rates is a tightening and loosening process for the economy in order to keep it balanced. Now, even though the interest rate 0.25 sounds very minute, the major banks, the central banks, lend massive amounts of money to the smaller banks, so it actually makes a huge difference. If this interest rate does double this week, it means that those who are mortgage lenders and even credit lenders are going to be paying a lot more on their actual contracts.
That's right, and I mean, there was a meeting earlier on this year where the committee, 6 out of the 8 members, voted to keep it at 0.25%. So these data were correlated with due to the sluggish GDP, and it would be actually a good increase if we did go to 0.5.
That's right. I feel like banks are a bit of an uncomfortable position because it's facing inflation, but at the same time the economy is slowing down, especially even in the housing market as well. So we're going to be seeing on Thursday whether interest rates do go up or down, and that of course will be affecting everyone in the UK and especially GBPUSD.
Now guys, finally, the effect of these hurricanes. Now we do have some further economic news coming out this week, but we're not quite sure yet of the impact that this could affect. I mean, there's things like job sales, there's things like retail sales, and manufacturing data.
That's right. So especially I want to take a minute to actually hope everyone that watches Technical Tuesdays that's been affected by these hurricanes, safety, and I hope everyone as well over the next few days and few weeks whose lives have been impacted by this hurricane.
Okay, so now what we're going to do, I'm going to show you guys the dollar index, because as John was mentioning, the hurricanes and the chaos that's going on in America is going to impact the economy and slow it down. But coincidentally, the dollar index has just broke a huge level as well. So let's look at the dollar index and how that's going to come a lot lower, and let's look at the pound index to see how far we can actually recover.
That's right. So I hope you guys enjoyed that part of today's Technical Tuesdays. Now let's go on to the charts. We'll be giving you guys some trade setups and opinions for this week ahead.
Okay, so we've just wrapped up and finished the major macros. Now, dollar index, let's go into this firstly. For you guys who are new to the dollar index is a standalone price reading of the dollar against 6 currency counterparts. So we can more or less say it's an average against the major 6 currencies. So as you can see here on the screen, I have marked on 100% initial value. Same with all of the other indexes, that when the market, in particular the dollar, in this instance, is floating around 100, that means that it is at its base point, its initial value. As you can see recently, this was the start of the year. Into the start of the year, we exceeded past 100%. So the highs on this, if I just move my crosshair, it was 103.7, meaning the dollar was up 3.7% against its counterparts. What happened afterwards was the market actually declined. We had MA crossover. We can still read the price action on this chart. My preference is to always view index charts on the monthly, weekly, and the daily. I like to look at the overall trend, see if any levels have been broken, and each level here that I have on is simply just 2%. We came back below the 100% initial value, but if we relate this, because I am going to be going over the euro, so let me just pull this up. Euro USD on the monthly time frame. Now, monthly, similar to the pound, actually, when I did mention 1.2 on the pound, held very, very strong, and then we've seen uprise. Over here on the Euro USD, if we see the lows at 1.0500, we had a false breakout. At the exact time of this false breakout, if we correlate this over to the dollar index, look what happened. Here, that's when the dollar index exceeded its initial value and then came back below. So we're talking April, May times of 2017. Dollar index broke back below its 100% initial value, started to take out various levels. As you can see, we've actually broken a major level, which is 92, and we're currently trading at 91.90. So let's just say 92, meaning we're actually 8% down against its overall counterparts. So as the dollar index falls, the euro has a 60% correlation with this. Reason being is because the basket of currencies that were attached to the dollar index before were all of the currencies in the European Union, and obviously they were replaced by the euro in itself. So looking at the euro, as you can see, we had the false break on the dollar index to the upside, and we had the false break on the euro to the downside. Come, as I say, April, May, of 2017, euro started to rise. Price actions told us and suggested that was going to happen, and then also the dollar index declined. Now, what's important here is that John was mentioning the hurricanes and the calamities that are happening over in the US. Now, this 92 level has been broken. This is a weekly chart, by the way. Looking at this on the daily, we have broken it, and now we're actually getting a retest right on this zone. The EMAs are down on various time frames as well, signifying that we are in a strong bearish trend on the dollar. I am waiting for a bounce from current levels down to maybe 90, so we're probably going to look at losing another 2% on the dollar index. If I go a little bit further out, 88, 86 could potentially be the prices in which dollar index is going to fall, which will also suggest higher prices on the euro, which I do believe euro is going to come up. I'll go over that in a second, and the pound as well. Quickly, I was struggling to find the pound index over on TradingView, but I did manage to find it over here. It wasn't loading on my watch list for some reason. Currently, we're at 76 on GBP index, right? Now, if we go back 10 years, as we did mention when the interest rates were modified, the 10 years, I think it's just around here. That's when it was at its 100 peak, its base level, its initial value, sorry. Then we actually had market crashes, etc. And we can even see this on the pound chart, where pound absolutely just tanked months upon months upon months upon months. Now, lows on the pound index around 73 to 74. So pound has taken a beating, and it's been around 26-27% down against its counterparts overall. Now with the interest rates and so forth looking to be raised, and even GBP, and that's going to go over the GBP analysis shortly, we're actually looking for higher prices, maybe even 1.5 on the pound is my suggestion. So now this index can start to rise, dollar index start to fall. So let me just break down the euro quickly. So guys, euro, I'm sure many of the viewers anyway have been looking at my today's technicals, which have been posted day in, day out over on everythingfx.com. We've been following the euro on the bullish side of things for quite some time, ever since this rejection of 1.0500. Monthly candle after monthly candle, we've had 1, 2, 3, 4, 5 bullish runs, but we're now stalling around 1.1925. Last month, as you can see, we spiked above it but closed below it, and now we're just fiddling around at that level. Where do I see this going? Short term, if we look at the weekly, I do believe that we're going to get a strong weekly closure, bearish weekly closure, sorry, below 1.1925. And then on the daily as well, yesterday we actually put in a free drive pattern. We had 1, 2, 3. It made its new high last week. Very, very weak closure on the Friday, but these 3 candles here are signifying that lower prices can actually come in on this Euro USD, but 1.1925, where it's balancing on right now, is proven to be a strong area of support. However, looking at a 4-hour time frame in particular, let's just zoom out a little tad here. Where do I see euro coming right now? We just had another bearish entry pattern actually in the last 4 hours or so on the last candle closure. MAs are down. We had a nice strong formation here as well, the closure below. I'm looking for this to break. Next level to look for is going to be 1.1822 to 1.1850. So if I just mark this onto the chart, something to consider here, guys, is going to be this zone. Why? 2 reasons. Last week we shot up. I had a losing trade on the euro. I was more or less going against my analysis, to be honest, and the news didn't help. It happens at times. We sped up, came up to make the new highs, but now this area right here where we have this base point is going to be an area where any people going long would have stop losses below. So I do believe Euro USD is going to break 1.1925, close below it in the next few days or so, and come down to this level and maybe even just spike through there. Ultimately, overall, I have 1.2400 as an upside target, maybe in the next 6 to 8 weeks on the euro. But again, we're going to cross that bridge when it comes to it. So I hope you enjoyed the analysis there. I hope you learned something from that. And on to the next. Thank you very much, guys, for tuning in.
Thank you very much, Sean, for that. Now, guys, if you have been following me or if you haven't been following me for a while, what I often do is actually concentrate on just my specific chosen pairs. Now, what I like to do is actually look at Aussie dollar, US dollar, and Euro JPY. Now, these are my chosen pairs. If you do follow Everything FX, that is what you will see me concentrate on the most. Now, if I go ahead and analyze for you just very, very briefly what I believe could be happening here on the Australian dollar. So from both a monthly, weekly, and daily perspective, we are looking actually very, very bullish to the upside. Now, we've been calling 0.8100 for an extended period of time, and we finally took it out last Friday. Now, I'm actually a little bit indecisive on what way I believe this can go now, because we've simply been rallying for such an extended period of time, over, whether it's been several months now, that we need to almost have a slight retracement. Now, Friday's candle, I believe that was more weakness due to profit taking than actually kind of the weakness coming off of that level. So if we do drop into a smaller time frame, we go ahead into a 4-hour time frame, what we can see on Monday, all that we've potentially done is fall to a bit of a level of support. So we've got a daily level here at 0.80165. Now, I've gone ahead and plotted that on simply because we've had 6 or 7, 8 rejections from this zone previously. Now, what we can see is at the moment, at this present moment, on a 4-hour time frame, we are in fact accelerating to the upside for this moment in time. Now, what do I believe overall? If I actually go ahead and show you what I believe or what I prefer to happen on this pair, if I could see something like this, if we go ahead and place a Fibonacci on here, what we could see actually is us falling a little bit lower to around 0.7600 level. Now, if we could fall to that level anywhere within this region, if I go ahead and highlight that for you, that is something that I would actually be a lot more interested in, simply because it's a deeper pullback. Now, I specifically trade in wave patterns, so I like deeper retracements and I like higher execution timeframes to actually go ahead and create the most amount of pips for myself. So at the moment, guys, we are responding off a shorter time pullback to that daily level of support at 0.80165. However, if we are going to go higher from here, we're going to have to keep into consideration 0.8100. Now, this was only the first attempt at ever trying to break this level. So it's going to be potentially a continuous resistant barrier for this pair. So we actually are sitting on our hands just for the time being. If we have a slightly deeper pullback, you know what we can potentially do. We can line that Fibonacci up for you guys. Also, if we are going to come back and revisit 0.8100, we're going to have to wait for a potential bounce back off of this level or a continued break. Now, I would personally wait for a weekly break of that level if we were going to go to the upside, and then I would be interested in a potential trade. So guys, sit on your hands for now, but keep monitoring this pair, as I believe there could be some good potential upside setups coming in the near future. Guys, thank you for watching.
So guys, last but not least, I'm going to be going through 2 of my favorite currency pairs that I do analyze on Everything FX every single morning, which is USDCAD. Then I'm going to follow that by GBPUSD, which we've based the whole Technical Tuesday upon. So let me start with USDCAD. So this is a daily time frame. I'll take this very slowly so everybody understands my 2 perspectives on this pair. So I'm going to start off with showing you a little bit of history of the pairs. That's one thing I love to do, is always just go back in time and show where the prices came from, because it will be a reflection on what can happen going forward. So USDCAD, if I were to go up further and further, ever since 1.37, we'll be making these lower lows and lower highs, just absolutely plummeting in price every single week. So 1.28 was the first major area of support that I analyzed on Everything FX a few weeks ago. And the price just absolutely demolished through that with a very, very bearish candlestick, very powerful bearish candlestick, breaking through there. It ended up then finding support at 1.25. Now, the chance that it came back up, it just simply just rejected it. So it almost broke through, retested, and then it continued. Now, it continued this past week due to two things. Number one was the Canadian strength. So, as Canada builds strength, then this will send this pair further and further down. So we had a drop in unemployment, giving Canadian strength, number one. And number two, the inflation actually led, now funny enough, we were talking about interest rates earlier. This led Canada to actually increase interest rates from 0.75 to 1%. Now that increase just shot USDCAD further past the downside, and it actually took out my area of 1.22, which is whole area of support just here. So again, interest rates, a great demonstration of the impact they do make. Now, a lot of people think USDCAD wasn't going to fall any further. I don't believe in the words overbought or oversold. I go where the market takes me, and I take in consideration all of the different technical factors and of course the fundamentals, which did push USDCAD further this week. I have an area of daily support here, which the price broke through, and then my next daily is here at 1.21. So now let me go to a bit of a slightly lower time frame. What I've been seeing in the past day or two is the price coming and not being able to really enter this zone and almost using it as a level of resistance right now. So that it's almost trading in between this daily level and this monthly level, this whole monthly zone right here. Now, I do believe the price will continue to push further down and possibly does have the opportunity of reaching 1.19. However, it's crucial that it does stay below 1.22. I do believe that we have various data, especially US unemployment out the end of this week. Now, with the way that Sean explained US dollar taking a pummeling itself and becoming weak over the past few weeks and few months, that continues, gives that Canadian dollar more strength to push to the downside to reach even further lows. So this is now 27-month lows we're pushing past on USD CAD. So that's USD CAD. Now let me move over to GBP USD. For the ones that are following Everything FX, it's been an absolute battle of 1.300, and various attempts of the past few months have led us. So back here, as we can see, it's been a very, very tough price to break. And then when it did originally break, it actually reached my weekly area of resistance at 1.32500, which is around here. Ever since then, again, USD dollar gained some strength, and that led the price back down, unfortunately crossing back over 1.3. Then it became range bound in between the zone right here, roughly from about 1.28 to 1.300. So this is a 200 pip range which GBPUSD was stuck in. Now, after a few days of area of consolidation, I do believe that dollar weakness, again, this is what led pound to break 1.300, and then two very interesting things. Number one was, of course, GBPUSD inflation rate, which is now pushing this pair even further. But all of the speculation before GBP's interest rates showing that the UK economy is getting better, of course, this is pushing more investors into the market. So we've actually just took off, broke through, retested, and then took off from 1.300. What I have right here is just a daily level, which if I go back in time, when GBPUSD previously broke 1.300, it used here this original high here, which I took, and as you can see, it caused some problems for this price. However, this time around, it was such a significant move, the price just continued to push higher and higher, and now it is taking up 11-month highs on GBPUSD. So this right here is 11-month highs, which is testing right now. So what I could even do is go ahead and highlight this zone as a crucial 11-month high on GBPUSD to see if it's going to break further this week ahead. I believe it's all going to be due to unemployment data, which will come out tomorrow, and then of course interest rates. Now, if this pair continues to break further upwards, we're looking at 1.33500 as a daily key level, followed by this my overall target, which is 1.3500. That's my long-term target, which if it continues the way it could reach a lot sooner than even I anticipate. So that's GBPUSD. As long as it stays above 1.3100, which is my daily, and then of course 1.300, the data this week should be giving UK a little bit of strength, pushing that pound further and further higher. Now, I do analyze this pair every day on Everything FX. If you're a member, even if you're not, go ahead and check out my analysis. And I do hope you guys enjoyed my USDCAD breakdown, followed by my pound breakdown. Thank you very much, guys, and I hope you enjoyed Technical Tuesdays episode 51.